welcome the Managing Director at Equity Group, Benjamin Bygott-Webb. Thank you very much for joining us. Interviewed by the head of NATIXIS CIB Tech Hub, Patrick Rouvillois. Patrick, the floor is yours.
Thank you. Hello to everyone. NATIXIS recently participated in the debt raising for the CapEx rollout of InstaVolt, the leading independent owner and operator of public rapid electrical vehicle charging infrastructure in the UK, which was recently acquired by Equity. So today, I'm pleased to welcome Benjamin, who is a member of the InstaVolt board. Benjamin joined Equity Partners in 2019, and he's MD of the Infrastructure Fund, and also sits on the board of Covanta Europe, one of the leading UK and Irish owner and operator of energy from waste facilities. Prior to joining Equity Partners, you were also an investment director at Antin Infrastructure. So thanks a lot. So very, very glad to have you here. So let's really dive into the topic. Why did Equity invest in the EV charging sector? And what is your vision of that sector, and why InstaVolt?
Brilliant, thanks. I actually feel I got a bit of the dud deal, as I could have hopefully been on the panel before, but with lots of other people, but you've given me the solo one, so that's great. No, look, it's kind of actually resonates with a lot of what was said before. You know, I think talking about energy transition, it's a super exciting, super topical, super thematic sector. We need to get smarter, both on the equity side and on the financing side. It kind of reminds me when I first started at EQT and started the UK office, I'd get called up with my bosses every week saying, you know, what are you looking at? Like energy transition. And I'd be like, yeah, I know that. You know, it's super interesting. I'm like, yeah, it's really interesting. It's like, well, where are the opportunities? It needs to be a $500 million investment. It needs to tick all the infrastructure characteristics. It needs to be predictable, resilient, you know, and have, you know, everything else that we need to be thematic. And I was like, it's super hard. There's not that many investments. You can't have your old historical view of investing and invest into this space, otherwise you miss the opportunities. You know, we've seen it before. You know, it was only, you know, I think it was mentioned in the previous talk, smart metering, you know, 4 or 5 years ago, that was a brand new investment thesis, like, you know, very high risk, high cost of capital money coming in, and almost overnight that shot down to super core infrastructure, and you saw the takeouts in the UK on that. So, you know, I think we've been pushed to look harder and harder to really find those angles, to continue to work on even opportunities that, you know, don't even fit our investment thesis yet, just to understand what's coming next, what's going to be the big movement. So I think with InstaVolt and EV charging, I mean, it's coming. I think hearing all the talks before, no one's disagreeing with that. There's a huge opportunity here. There's a huge amount of money that needs to go into building out the infrastructure. A huge amount of money needs to go into all the various parts of the supply chain with EV vehicles. And I think we've looked for about 3 odd years looking at different platforms across various countries in Europe. And InstaVolt was a really unique asset for us. It was a leader in the market. It was the it was the, you know, best performing, downside protected. It had very good contracts already, so you knew exactly what your pipeline was going to be. And it had huge tailwinds, which we see across all these sectors. So for us, it was a very obvious place to start looking. It was a very obvious investment, and I think there are a lot of other funds that are looking at it and a lot of other people who knew that, and we're very excited about that place. And you know, we're super happy with it so far. It's early days. Normally in the first 6 months of owning an asset, you get to know whether it's going to be a real pain for the next 5 years of your life, or actually it's not going to be too bad. And I think at the moment it's not looking too bad, which is great. And I think what we see, you know, we were a bit too, if I look at one thing we did wrong, I mean, we got challenged to the nth degree on this from our investment committee, as you can imagine. You know, we had to go down, we had to show how predictable this was, we had to really dig down into all the data, we had to see the driving patterns, we had to see the utilization of each of the sites, how this was going to go forward. And what we ended up doing is probably looking at it too negatively. We were always looking at the downside, you know, what's really de-risked today and not what's the opportunity. And right now we're sitting here and there's just so much to go after. There's so much growth. And I think our real risk today is, you know, let's go after the right growth as well as focusing on the existing business. And that's also quite a discipline in itself. So I'll pause there.
Great. What do you expect from the lending side of this kind of ramp-up opportunities that are appearing in the market, EV charging and all the other infrastructure we were talking about around mobility? What key challenges have you found when raising debt for InstaVolt?
Yeah, so we put in place, as you said earlier, a CapEx facility post the acquisition. We went to a couple of our kind of key relationship banks, as you'd imagine, and I think it goes back again to getting smarter in the sector. You know, the key banks who have led the way in some of the other infrastructure kind of key thematics investments like fiber rollouts, you know, stuff like that. These are the kind of people who are leading the way and understanding the sector the best. And it was an education process. You know, we had to take our lenders through what we saw in the business, why we thought it was protected, why we saw the resilience in the business. But actually, I think it was a fairly smooth process. Maybe you'll disagree. But I think that was actually a relatively good process. We've now set out what we want to do. We now have to deliver on it. So, you know, it's actually a very simple business model here, certainly for Instavolt, and I know there's other EV charging models out there, but I mean, there's about 3 assumptions you have to get right in this. So it's your rollout speed, you know, how you roll out your number of chargers in the ground. It's your utilization, and then it's your cost margins on your power pass-through. So saying 3 assumptions is very easy. It's actually very difficult. You have to put a huge amount of work to get comfortable with what you're assuming in those, but it's actually quite reminiscent of the fiber rollouts that we saw in the UK and across Europe earlier. You know, it's a similar idea. You know, homes passed, penetration rates, and then your ARPUs. It's not a difficult business model, but you have to really bring people through that journey and show them the data and what's happening and moving. And you've got to remember, this is a super nascent sector. At the moment, there's about 400 to 500,000 EVs on the UK roads. That's 1% of all cars on the UK roads are EVs right now. I mean, it is super nascent. That growth that's coming, you know, by the end of the decade, last kind of stat I saw, and you know, there are different statistics here, but it's going to be 14 or 15 times growth. I mean, that's unprecedented for the infrastructure sector, which is, you know, all of us are used to looking at very stable, quite boring businesses, if I can say that. So I think that's another way that the sector needs to evolve. It needs to get smarter. It needs to understand how to invest into that growth. And I think so far it's been great. And I think hopefully the lenders will be proud, and we've got to do what we said we'd do.
Great. It's a very fluid environment, as you were reminding us. You know, a lot of growth moving forward. How do you view the split of the value pool in the industry between what is actually real estate and location, so I would say more traditional infrastructure, charging station hardware, grid connectivity, payment services, and digital services? And how do you see that today? And how do you see that also evolving in the future?
Yeah, so the kind of value pools. So absolutely, and there is a huge amount of value coming into the sector. It will be split out between those different segments, as you said. And I think where we really see the key part is in the real estate and also owning and operating the infrastructure, as you'd imagine, you know, the asset heaviness of it. And I think that was something that we needed to get comfortable with our kind of investment committee on those infrastructure characteristics. So the way it works in Instavolt is, you know, we have 15 to 20-year contracts, very sticky contracts. We are owning the grid connection. I think that's a key point. So, you know, actually that hard investment into putting a charger in the ground, about 50% of the CapEx is actually in that grid connection. And if you look at the end of those contracts, and you know, we did a lot of work around this, and who knows what the world's going to look like in 20 years' time. I think it's difficult enough to know next year. But you know, at the moment, you know, what you have that protects you there is any new person who would ever take that site off you or could bid against you, has to bid in without a grid connection, so has to buy a whole nother grid connection. B, doesn't have the data of how that charger operates. And C, actually written into our contracts as we have a right to match. So we got super comfortable that although we were only writing 15 to 20 years, which, you know, is a good as a starting point, we're super confident that they're very, very sticky, those contracts, and how those are structured already.
Yes, you were saying to me earlier that in fact, not only the location, you know, in terms of geography, but also the location in the grid. And once you've actually secured some point, you know, which requires some grid reinforcement,
yeah.
The next one who would be willing to be on the same location or close would actually require further investment.
Exactly. And the kind of premise of the people who built Instavolt, they're all grid guys, essentially. So this is where their real USP has been, their real secret sauce. And I think if you look at the growth of the platforms, I mean, Instavolt's come from nowhere. It overtook BP to be the second largest charger in the UK. And, you know, I think we're quite confident by the end of the year we'll be ahead of Tesla as well. So growing very, very quickly. And that's the tough bit. It's getting the grid connections. It's knowing how the grid works. It's getting it at the right price. And then, you know, it's a huge barrier to entry because once you've taken out part of that grid connection, the next player has to either dig a lot further to get that grid connection, or they have to put in a substation, and the capex goes up a huge amount. So you're in quite a good protected position from overbuild in your space. But the location point's really critical here, and I think this is something we found. So we did a lot of work around looking good sites versus bad sites, what makes a good site. And we took all the data from our sites. We do this every Monday. We get a report every single site, how it's charging. Love data. And then we do regression analysis on it. We go, what drives these good sites? And we've built this big algorithm that looks at loads of different variables. I think 120. I'm sure McKinsey made their fair pound of flesh on that little project. But it's how rich is the area? How many EVs are there? What's the affluency? What's the location? Et cetera, et cetera. And we came up with kind of what drives a good site going forward. And from that, what was really interesting to see is our McDonald's sites. People said to us, why would, rather snobbishly maybe, said, why would EV drivers eat at McDonald's? Obviously love McDonald's. They're absolutely fantastic sites. Every country you look at in Europe, McDonald's is such a key blue chip contract. You get such good utilization at those sites. And strangely, and look, it's small data, so take what you want from this. Our worst performing sites on our network are forecourts. And again, that was a surprise to us because, you have all the stories out there, BP, Shell, they're going to just convert their forecourts. Everyone will go there. What it turns out to us is people don't want to spend 20 minutes at a forecourt. That's a horrible place to spend there with your 4 kids in the car, having a nasty cheese and pickle sandwich. It's a coffee at Costa or a coffee at McDonald's. And, it's a land grab now. Those contracts aren't going to be around forever. So, that's, again, why did we lean on this? We wanted someone who we could go with a great platform, who could lock in those contracts today and really get those barriers to entry in that protection.
Great. Thanks a lot, Benjamin, for your time. Congratulations for the investment in InstaVolt, and looking forward to support you in the future if we can.
Brilliant.
Thank you.
Thank you very much. Thank you.